Hi guys, I'm Manu and welcome to another episode of Sweet Money. I'm a CPA from Canada and the US, and I have a cool little accounting firm better known as Shandle CPA. So, you finally decided to quit your dreaded job and you're now going to become an entrepreneur and take your skill set to small and medium-sized businesses. Congratulations on opening your corporation or your sole proprietorship. And most importantly, congratulations on becoming a wolf and going into beast mode. There are several tax-deductible expenses you can take advantage of as you set up your business and open your doors. Let's get into it. Startup cost. The expenses incurred before you open up your doors to the public are tax-deductible. For instance, market research, any surveys, advertisement, professional fees can all be deducted. In essence, if you're spending money to get your business on its own 2 feet prior to opening your doors, every single dollar that you spend is tax deductible. Office expense. Now this includes your rent, utilities, furniture, supplies, any insurance required by the landlord. One expense a lot of entrepreneurs leave out because they're not aware of it is, for instance, if you go visit different properties to see which one suits you best, and you stop in the middle somewhere to grab lunch, that sandwich is tax deductible. If you spend $18 driving from property to property to property, well, that fuel that you burned is tax deductible. Salaries and benefits. If you put yourself on salary or if you have staff on salary before you open your doors to the public, well, those salaries and benefits are tax deductible. In addition, this is very important. If you have unused RRSP contribution room from your employment days, and now you, for some inexplicable reason, you're paying yourself in dividends, you can actually make RRSP contributions and reduce your taxes that you would pay on your dividend income. Meaning, your RRSP room that is still available can be used even if you don't generate employment income. Now, here's another piece of information that catches a lot of entrepreneurs off guard. Now that you are an entrepreneur, you have to make CPP contributions not only from the employee side, but you are also responsible for the CPP contribution from the employer side. Therefore, you are responsible for both sides of the contribution. Professional fees. Now, this is pretty self-evident. It's the fees that you pay to your accountants and lawyers or any consultants that you use in order to get your business started or even after your doors have opened. However, what people don't know is that if you apply for permits, those permits are tax deductible. In addition, if you are using your internet at home to do research regarding your business or which lawyer to use, that internet bill is tax deductible. If you're using your cell phone before you start your business to call accountants and lawyers and other consultants and landlords, well, your cell phone is now part of the business expense. Advertisements and promotion. People think of advertisement expense as your digital marketing, or if you get branding, or if you get a TV ad or a radio ad. But it goes beyond that. If you have LinkedIn and you decide to get premium subscription, well, that subscription is now tax deductible. By the way, I'm not promoting LinkedIn. They're not a sponsor. However, I am promoting myself. Give me some SLC. SLC stands for subscribe, like, and comment. And by the way, when you do these 3 things, you're not just helping me, but you're also helping the community at large. It helps the algorithms push these videos out to people who are looking for this information. So please do the community a favor by helping others and smashing that like button. Travel expenses. Now, your business expense can include your automobile, that plane ticket, or the hotel where you stay. However, did you know even the minutia of business travel expenses are deductible. Let me give you an example of an expense that people don't even think about. When you're at the airport and you have to pay $5 through your credit card in order to get that trolley to push your luggage around, well, that $5 that you spent to get that trolley for that business trip is tax deductible. And here's another bonus for you. If you have to take an extended business trip for some reason, that dry cleaning bill is also tax deductible. Vehicle expenses. The CRA loves to audit the vehicle expense. Now, your vehicle expense is, the obvious, the lease, the financing, your fuel, your insurance, your repairs, any maintenance. Okay? It's all good and dandy. Let me tell you a quick formula of how it all works. If you drove your car during the business year 30,000 kilometers, and of those 30,000 kilometers, 15,000 kilometers was for business purposes, that means 15 divided by 30 is 50%. Therefore, 50% of all expenses related to your vehicle are tax deductible. Like I said, your financing, lease, fuel, insurance, maintenance, repairs, winter tires, and the list goes on. However, if your car was purchased inside the business, there are rules, specific rules regarding the lease and financing payments that you make, what portion of it is tax deductible and what portion isn't. So there's very specific guidelines about it. And if you guys are interested in learning more about this, let me know. I'll be more than happy to make your wish my command. Interest and bank charges. Now, if you take a loan, all the interest that you pay on that business loan is tax deductible. If you open a business bank account, well, those banking fees are tax deductible. If you have a business credit card that charges you an annual fee, that annual fee is tax deductible. And let me tell you one last thing. I've said this before. I'll say it again. Please keep your personal checking account and your business checking account separate. Have two separate accounts. And the same applies to credit cards. One credit card for personal expense, one credit card for your business expense. Please do not mix the two together. Insurance. Premiums that you pay for any insurance that's related to your business. Now, some landlords will insist that you get insurance covering the office that you're renting. But one insurance a lot of entrepreneurs don't even think about is commercial insurance. And the reason why people don't think about commercial insurance is because it's not heavily promoted. We don't really talk about it. However, it is very important to protect yourself from a lawsuit, whether it's from a client or a vendor, through commercial insurance. Otherwise, it can get very expensive very quickly. Capital cost allowance, which is also known as depreciation in everyday accounting language. Now, capital cost allowance, aka depreciation, is used when you purchase heavy equipment, machinery, and assets that have a long life in your business. Okay? However, not all equipment and machinery is a asset that is depreciated, and not all assets can be expensed. Now, the Income Tax Act does not give a clear defined stipulation on what is expensed and what is depreciated. There's a gray area. However, consult with your accountant. The accountant, through experience, will guide you as to what is a safe and reasonable step to take when you purchase the asset and whether you should expense it or depreciate it. In addition, your CCA can be used as a very effective tool for tax planning. Therefore, consult with your accountant and figure out how to best weaponize it to your advantage. And I will keep beating this point like a piñata. All right, guys? In addition to the bank accounts and the credit cards, I also want you to have proper bookkeeping in place. An entry-level bookkeeping software will cost you $20 to $30 a month. Okay? Your bookkeeping fees in the beginning will be quite low because you are starting out and you might not have a whole lot of transactions. However, it gives you the peace of mind that your books are in order. So when you file your taxes, they're accurate. And number two, just as important, you have a clear image at any given point of where you stand in your business. You know how profitable you are. You know how much money you might be losing. And most importantly, you have visibility into your cash flow, which is vital. It's a lifeline of every business. Now, I have seen some friends go into partnership and they think just because we're homies, I've known this guy since I was a kid, we don't need a partnership agreement. And this is financial suicide. Look, just because you're friends and you get along when you guys hang out, watch the game, or do whatever it is, it does not mean you will get along the same way once you open a business together. Money changes everything. And secondly, our work ethic are not all the same. You may view a customer in a very different light. You may treat them differently. Your level of customer service might be different compared to your friends. The way you spend money and budget money, your outlook might be very different on how money should be spent and where it should be spent. Having a contract with a good corporate lawyer, a well-defined contract, will save you from these pitfalls, which can not only ruin the business, but also destroy your friendship. Therefore, do your friendship a favor and make sure you have a bulletproof partnership contract in place. And in this contract, you have to tackle some very difficult topics. It's almost like you're preparing for a prenuptial agreement. In the event that we leave the business, what happens? If you don't want to work with the person, what happens? If you leave, how will you split the clients? How will you split the assets? Who will do what? Who will manage what? Who is responsible for what? Are they responsible financially or only from a duty point of view? And all these topics can be very difficult, and sometimes it can have an impact on your friendship. So once again, be very careful as to what it is that you are getting into. Listen, guys, all business at some point will go through a CRA inquiry or a soft audit. It's inevitable. It's not a question of if, it's a question of when. Therefore, please take all these advice that I've given you to heart because I want you to be prepared. And if you have any questions, feel free to reach out to me. The link to my website is in the description, and I've also added it down below on the screen. But most importantly, make sure that you are going into the business knowing that this is something you enjoy and something that you can do for the long run. Do not get into a business because you've seen someone else be successful and you're assuming just because that person's successful, I will be successful. The copycat model never works. Okay. The CRA says that you can open your HST account after you start generating more than $30,000 in revenue. I do not want you to follow this instruction that the CRA has provided. I'll tell you why. I want you to open your HST account as soon as you get your corporate number. As soon as you have your CRA number and your corporate number, you open up that HST account. And the reason being is the tax benefit through an income tax credit is far greater than the tax benefit you will receive when you use that HST amount as a tax deduction. So remember, an income tax credit is always superior to an income tax deduction. And remember, it all starts with a simple conversation.